let's have a break of 10 minutes, and post which we'll do section B 2 questions. Okay, 10 minutes break. So it's 1:30. We will resume at 1:40. Yeah, so now we're going to start with section B questions, and section B has 2 questions, 25 marks each. Again, each 25 marker will have a 5 marker for your skills, right? Any 2 skills will be tested here. Now you have seen that in section A also we did not do anything really very technical and very in detail for acquiring those skill marks. You write everything in the desired format, in the desired way, and with the explanations, with the notes, and you grab those skills marks. So let's grab these also. These are small questions now. So now here let's do section B questions. Let's proceed with the first one. So I am taking the first one, which is Hiroshi and May case. Again, the reading pattern, the reading structure would be same. Okay, now you should assume that today's date is 1st December 26. Hiroshi and May, a married couple, so there can be a tax planning from the marriage point of view as well, and spouse exemption, spouse criterias. They should instantly come to your mind when you see a married couple is there. Okay, and require advice in connection with the following: with Hiroshi's taxable income and renter room relief, with the availability and impact of FIG scheme that we have already covered, and the same we have to discuss here, and close companies. I've told you that FIG scheme is going to be there in your exam. So you have to be absolutely having a hold of it. Okay, now, and close companies. So, close companies, we have to see the relationships and all. The following exhibit available on the left side, only one exhibit will provide relevant information to the question, but let's see the requirement of the question. First requirement is explain the availability and operation of renter room relief in relation to Hiroshi and calculate his taxable income for the tax year 25-26 on the assumption that the relief is claimed. So we will do the calculations, but you can see it is an 8 marker. So, how would the division be? See, when you want to talk about the renter room relief and its operation and its claim, that will be roughly around 3 to 4 marks, and the remaining 4 to 5 marks will be towards the calculations. Okay, and what you have to really write about renter room relief, you already know about that from property business income. Just link it with the case, and that's all. That's all how easily you will get the marks here. Okay, now look here. So, let's quickly look at the question, the exhibit, and the exhibit says, I will just open the exhibit here. And I will also open the spreadsheet. Yes, even I can write theory in spreadsheets if I'm doing the calculation part. Okay, so now let's do here. Hiroshi has been UK resident since the tax year 24-25, was previously non-resident for 15 years. Why it is given to you? For the FIG scheme, and is married to May. May has been UK resident in tax year 22-12 and was previously non-resident for only 12 years. Hiroshi's income tax for the tax year, and we have to calculate tax liability for Hiroshi as well, right? No taxable income. And it says that the salary gross and the benefits from Pinnacle Company's current employer is 42,300. So here I can write the first part, calculation of uh, taxable income of Hiroshi for the tax year 25-26. Okay, the first is salary income. Here I can just insert the symbol as well. Right, so here I will write salary income. Salary income is given to you 42,300. Now, next, pension from a former employer 15,600. So, pension income also will come here 15,600. Next is Hiroshi and May rent out a furnished room in their jointly owned family homes for 18,250 a year. Their allowable expenses in respect of rental income is only 1400. So in case of Hiroshi, it is mentioned that they will go for rent a room relief. Okay. Now accordingly, we are just calculating the taxable income for Hiroshi, right? So yeah, let's just calculate Hiroshi property business income. And here we are assuming that she will go for the renter room relief, right? She will go for renter room relief. So the income is 18,250. The jointly owned income is 18,250. So for one person, the income will be 18,250 by two. And from this, I will reduce renter room relief. 7,500 is for two because it is jointly. So divided by two will be for one. Clear? Now this is how you will calculate. So here in the bracket, though, I can just remove the plus sign. I can show the calculation here. And here I will take the plus sign. So we get here 5375. Now in the notes, because the question specifically she is asked you to write the theory parts, you will write that renter room relief will be available because Hiroshi and May are they are paying rental. They have jointly taken out a refreshed furnished room in a jointly owned family home. Okay, in a jointly owned family homes that they've taken a furnished room, and as per the rules of renter room relief, then it can be claimed, whereby the expenses will not be allowed. Rather, 7,500 will be the threshold limit provided to both the Hiroshi and me combined. So accordingly, each of them will get 3,750 each, 7,500 divided by 2. Clear? And the time period, because it is talking about renter room relief, so we need to talk about the claim period also. What is the claim period within which the claim must be made? 2 years. No, it is 22 months from the end of the tax year. So, end of the tax year is 5th April 26, 22 months will be 31st January 28. So, by this date, the claim must be made for renter room relief. Okay, that's all. So, done. You get your 3 marks for that as well. And here also you're doing the working. Clear? Now, let's take the next one. The next pointer is there. We have done this. Now the next is share-based remuneration is provided to Hiroshi by Pinnacle Company in the tax year. So here I will write share-based remuneration, which is given to here 400 shares in Pinnacle Company were issued to Hiroshi for 1300. Hiroshi was granted non-tax advantage share options to purchase 300 shares for 5 per share. Now here we have three dates, right? Grant, exercise, and finally selling off. At grant date, there is no income to be added, but at exercise date for non-tax advantage scheme, we will add, and as well as at the disposal date. Okay, so let's write it here. Um, Okay, anyways, so Hiroshi exercised the non-tax advantage share options and purchased 250 shares at 2 per share. Hiroshi had paid 50 pence for each of these options. A share in Pinnacle Company can be assumed to be worth 10 throughout the tax year. Pinnacle Company does not operate any HMRC advantage scheme. Now, what is the rule? When we see it is all falling in one tax year, so we don't need to do two transactions. Otherwise, if they were different date, then we would have calculated the income for the at the time of exercise date and income. Um, the income at the time of exercise date. So what is the employment income to be added? Because we're not calculating chargeable gains here. What is the employment as as it is not sold? So the employment income to be added will be simply the difference between what is the value, the market value of the share. That is, we call it as market value on the exercise date, right? The market value is 10 throughout the period. So it will be 10 multiplied by 400 because 400 shares were issued to Hiroshi and less the cost because and the value which is over and above the original cost will be taken as income. Correct? So the cost is 1300. Now, if the exercise was a different date, then we could have taken exercise price and market value difference and the original cost and exercise price difference. So ultimately, you would have arrived at the same total figure only. Hence, we're not doing it separately. We are just doing it at one value only, as every transaction is taking place in the same year. So, what is a share-based remuneration? It will be 4,000 less 1,300. Why it is not coming? Okay, bracket issue. Right? So it is share-based remuneration is 2,700. Done. Now, okay, wait, I'm sorry. There is share options also. So there are options and shares. So here we have share-based remuneration and we have options, share options. So for share options, I will take at exercise date. And then we take at disposal date. The share price is 10, so we have taken here 10. Now let's take for share options at exercise date. At grant date, there is no entry. There is no entry. I'm sorry, huh? I just merged it. Now I read it, it's options and shares. Okay. So now what will be the income that will be taken on the exercise date? So you have exercise price. Exercise price is 2 per share. Right? Exercise price, no. Exercised at 2 per share and Hiroshi paid 50 pence. So exercise was at 2 per share, but he paid 50 pence for it, right? So what is the exercise that we will take here? Look here. What is the income that we will take here? There are 250 shares, 250 options, sorry. There was somewhere, yeah. Hiroshi exercised. Hiroshi was granted for given a grant for 300 options, but she actually exercised 250 shares. Okay, now she exercised 250 shares, and now the market price is 10. But from 10, I will reduce 50 pence, the price that she has paid, and the exercise price. It's correct, right? Just a minute. Let's just validate it. They are the non-tax advantage share options. Okay, what is the rule when we take non-tax advantage share options? We actually take the difference between this is the exercise price of 2. Hiroshi had paid 50 pence for each of these options. And now she is paying at 2 also. So she's actually paid 2.5 for each option. Market value is 10. So the income, the excess over it is the income. Right, so that will be 1875. Clear? Yes. Am I clear till here, Madhvan? Please tell me. Yeah, because this is pretty simple, not very complicated at all. Now you just take the sum because we are calculating the tax for the tax year 25-26, the taxable income. Here, if you see the next detail is given for 26-27. So that I will take in the next portion, but not now. So this is my net income. Okay. And now I will reduce PA to get the taxable income. Full PA can be reduced. And now I will get my taxable income. So my taxable income will be, when you take it, now it's simple, just sum. You get a 55 to 80. Taxable income done, rent a room relief done, and you are done with everything. The A part is done completely. Now let's look at the second part, because I'm sure that is about the FIG scheme. Now the B part of the question is, so we're done for 8 marker comfortably. Uh, Only very important in this calculation was the non-tax advantage shares and non-tax advantage options. These two were technical points here. Now state with reasons whether or not the FIG scheme is available to Hiroshi or May or both of them for the tax year 26-27, and on the assumption it is available to both of them, explain whether or not a foreign income claim is likely to be beneficial for each of them. Okay, so we need to do the calculations. Here it says no calculations are required for this part. So don't do calculations. Theoretically, we have to discuss whether it is going to be beneficial for them or not. Okay, so it's a good question. Let's discuss the theory portion only. So we can do the discussions here. Okay, now I'm doing the this part. Now let's talk about Hiroshi. Now, first thing when we say about the FIG scheme is applicable when a person has a the continuous period of non-residence for at least 10 years. Then the first 4 tax years after becoming a resident becomes will be covered for FIG scheme, right? Now if you see, Hiroshi was previously non-resident for 15 years. She became resident since 24-25. So 24-25, 25-26, 26-27, and 27-28. These are the 4 years when FIG scheme can be availed. Clear? We can talk about that. So here we are talking about the overseas income in the year 26-27. Right, because it is done that it is regarding to the investments in the country of Lokia. Hiroshi will receive 1700, May will receive 20,300, and there is no income tax in the country of Lokia. Blossom we will cover later. So it's only this information given. So now here for 26-27, it becomes a third year for Hiroshi. What about May? May has been previously resident since tax year 12-13 and was previously resident for the last 12 years. That's okay. But then she is a resident for the tax year 12-13. So can May make a FIG claim? No, because only first 4 tax years since May becomes resident would be 12-13, 13-14, 14-15, and 15-16, which is long back over. So May cannot apply for an FIG claim in the tax year 26-27. Clear? This much we have done. Now the other part, whether it will be beneficial for May and for Hiroshi to go for an FIG claim or not. If you look here, Hiroshi will receive 1700. Okay, and the investment is 1700 in Lokia. Correct? Okay. What criteria do we decide whether it is beneficial or not? So remember that no remittance. Hiroshi, I hope you have covered the overseas tax. You were there in that class, Madhavan, when we did. So there we have covered, right? That remittance basis is all over, domicile basis is all over. So what do we see here? If FIG is applicable, then we will add incomes and we will apply income tax and we will go for DTR, all that. Look at the base of this question. This question does not want to do calculations. Just talk about will it be beneficial for Hiroshi to go for the FIG claim or not? Then on what criteria do we decide? So understand that. See, remember, if we go for FIG claim means what? That your overseas income will not be subject to any tax. You will not pay any taxes on the foreign income or the gains that you earn. But in return, you will have to forgo, you will have to leave your PA and you will have to leave your AE. In case of Hiroshi, we have PA applicable of 12,570. So now it's a comparison between whether you want to pay taxes on 1700 or you want to lose your 12,570. Tell me which is a better option. To claim for FIG or to not claim for FIG for Hiroshi. Tell me please in the chat box, Madhvan. Because if Hiroshi goes for FIG claim, she will lose PA. If she doesn't go for FIG claim, she will have PA, but then she will have to pay taxes on 1700. So which is a better option? Of course, very good. So the better option is to pay overseas taxes. There is no overseas taxes paid. So no DTR will be there. Simply we will add it to the income, the gross amount 1700, and Hiroshi will pay UK taxes on it. Done. Let's go to May. Now May is not eligible for FIG scheme at all. So now here we will add 20,300 May that May is receiving to the income. And since there is no tax, so May will be, and there is no other income mentioned for May. So let's assume that there is no other income for May. So this 20,300 will enjoy the PA of 12,570, and the remaining income will be taxed as per the UK tax rules, because FIG is not applicable only for me. Am I clear? Okay. And there is no DTR available in both the cases, because overseas taxes, it's given that um, it is given here that there is no income tax in the country of flow year. So since there is no double tax, we don't have a double taxation relief to apply. Am I clear, Madhavan? Does it is it absolutely clear? We're done with the B part also. So this is how easy the FIG questions are. How easy. You just have to be very clear that if FIG is not claimed, if FIG is availed, then no PA, no AEA. This is the base for every answering. No remittance, no domicile. So please don't make this confusion. Have you gone through the overseas taxes part again? Please tell me. Yeah. So then why did you talk about remittance? Does FID talk about remittance? No. Does it talk about domicile? No. So don't talk about that. Okay. It talks about long term residents and qualifying new residents. Yes. Good. Okay. So we are done with the B part also. Now let's just take the last part, 5 marks. So now this is the reason why I said to go for section B first, because it's more quicker to do. In hardly 20-25 minutes, we are able to solve section B. Okay. Now set out the matters that needs to be considered. Again, a theory question. We will do a discussion of it. Set out the matters that needs to be considered in order to determine whether or not Blossom Company is a closed company. So we just have to remember the closed company criteria for a corporation, and then accordingly we'll do commenting. So we have a last paragraph of it. Let's discuss. Okay. Blossom Limited has an issued share capital of 120,000. Let's just zoom it a bit. Okay, Blossom Limited has an issued share capital of 120,000 shares. He is owned by 12 shareholders. What is a closed company? A closed company is a company which is where the major shareholding is owned by maximum 5 shareholders, top 5 shareholders, right? Each of whom owns 110, only owns 10,000 shares, right? Maximum 5. So if I take 5 shareholders, 5 into 10, and including the relatives also, right? So 5 into 10, including the connected persons that we say. 5 into 10 is 50,000. If I look at 50,000, then it's not a majority shareholding, right? Now, let's see the last point. Hiroshi is one of the 12 shareholders and is concerned that he might be subject to close company rules of his shareholding. So here we can say that here um, if we just see there are two rules, two ways by which a company becomes a closed company. If it is controlled by at least maximum 5 top shareholders of the company, or if it is controlled by the shareholding directors of the company. It is not given here. Now here comes your skill of, um, you know, what do you call? This skepticism. Okay, skepticism means what? Where there is the information is not there, right? For shareholding director, include that point in your answer and you will get your skill marks. Because the examiner will know, okay, you know entire things about it. Right? So here we can comment and write that first talk about what is a closed company. A company will become a closed company when it is controlled by any number of the shareholding directors or maximum 5 the shareholders of a company, 5 largest shareholders, right? So now here when we take the 5 largest shareholders percentage, like I said, we take the percentage of their associates or connected parties, or associates also, where we take husband, wife and all. So we take their associates also. Okay. And that's all. You don't need to detail explain who are associates, who are the partners, who are the relatives. You don't need to explain that. Now here, as per the question, if we take the top five largest shareholders, their shares are distributed evenly amongst the 12 shareholders. So that will become 50,000, right? And when we can do the calculation, then it is not becoming a major shareholding. However, the question is silent about if any of these are shareholding directors also. So if any of these are shareholding directors, then we don't have to see the numbers and then it becomes a close come. Correct? Clear? Done. That's all you have to talk about, and you get your 5 marks. You get 1 mark additional here for the skills that you presented for skepticism. Okay, difficult question, Madhavan. Done with section B, first question. Done, right? Okay. If you have any questions, concerns, you can ask me. Take a minute and ask. Anything you have to ask, you can ask. Should we proceed? Okay. Now, this is again, see, the pattern of the questions are same, just that the details become different. Okay, now this question is about you should, and it must be having VAT because every exam paper will have VAT, will have IHT, will have corporation tax, will have income tax, will have the overseas tax, will have groups. It is a mandatory thing that will be covered in every exam paper, every. Okay, now you should assume that today's date is 1st September 26. Tariq requires advice on the following. Okay, the loss relief available on the cessation of his trade, that is the cessation relief, the terminal relief, the VAT treatment of overseas transactions in his final period of account, the VAT position following the cessation of his business, and the income tax implications of a relocation payment, relocation, employment income. Okay, so let's see the requirement and let's do it step by step. The first one. Yeah, the you should assume that today's date is 1st September 26. And what is the skills required here to be tested? The skills are analysis, evaluation, skepticism, and commercial acumen, not communication skills. So they are not requiring you to write your answers in a particular format like the memorandum and all. Okay. The first one, you should assume that today's date is 1st September 26. Calculate the trading loss for the tax year 25-26 and the terminal loss on the cessation of Tariq's unincorporated business. Only 3 marks, 1 marks for the calculation of trading loss, and 2 marks for the terminal loss on cessation of business. So just the calculation, not the adjustment. Let's do it here. So parallelly, we'll do it. Okay, let's do it parallelly. Okay. Okay, let's read it and let's solve it also parallelly. Tariq ceased to trade on 31st December 25 and sold the assets used in his unincorporated business, sold his house, Coral Cottage, on 1st March 26 for 125,000 more than he had paid for it. That's okay. I just need first part of the question is relating to losses. right? So I will write here. First is, what is the trading loss for the tax year 25-26, right? This is the question I was asking. So first is trading loss for the tax year 25-26. Let's calculate it. The sale of the business resulted in net chargeable gain of 74,000 and the tax adjusted profit or loss of business is given to you. 9 months ending December 25, this is the sale of the business and all. So when we take the trading loss for the tax year 25-26, it will start from April 25, end on the cessation business. The cessation is 31st December. So April to December is only 9 months, 6 months, 9 months. Wait. So it's April, May, June, July, August, September, October, November, December, 9 months. So we just have to take 9 months loss, which is given to 27,000 straightforwardly. And this is your one marker. So it will be 27,000. Okay. And here you can write in bracket April 25 to December 25. Done. Let's look at the B part of the question. The A part, first part. Now I'm taking A part, second part. Now it says that the question was terminal loss relief. What is the terminal loss risk that we will have? See, what is terminal loss? Terminal loss is always the loss that is arising in the last 12 months to trade. Okay, last 12 months. Last 12 months from the end of the cessation of the business, we'll take last 12 months. So I will write it here. Okay, terminal loss is the loss for the last 12 months up to date of cessation. That is here, it is 31st December 25, right? 31st December 25. Okay, done. Now you will just take the terminal loss relief. So here first we will take 9 months. First is the 9 months period. And that 9 months period, we already have the loss detail. It will be from April 25 to December 25. And then I will take remaining 3 months. That will be penultimate period. Remember, the last period is the penultimate year. That will be there from January to March 25. Right? Now let's do the calculations. Here 27,000 is clearly given to you. And for January to March, I have this detail given to me that year ended 31st March 25 is 24,950 profit. That is for 12 months. Then what is for 3 months? 24,950 multiplied by 3 by 12. You get here 6238. Okay. 6238. Now just do the adjustment and you will get the complete terminal loss. So terminal loss is 20763. Am I clear? But if you observe at one point, here I have a profit and here I have a loss. So the question is, can I take profit and adjust it? Madhvan, tell me. Please tell me. Can I take the profit? I mean, I hope I've done the correct working. Tell me when we calculate the terminal loss. Madhvan, my friend, you are there or not? Okay. So one very important factor I would like to tell you here, that when we calculate the terminal loss relief and we take the penultimate year also, that is the last 12 months also, only if there is a loss you will take it. Okay. If there is a gain, then you will not take it. It is 6238. So I will write here ignored as there is gain. As there is gain. Gain, no, gain will be wrong term because it is related to chargeable gains. As there is profit. Got it? So we will ignore this. We will not take anything. I will take here 0, and that is going to fetch you 1 marks. Okay. So I will take it as 0. And so my loss, the terminal loss will be 27,000. I hope I'm clear. So terminal loss will be not 20,000 something, will be 27,000. Why? Because if there is a profit in the penultimate year also, we ignore it. Then we simply don't take it. Only if there's a loss, then it will be added, profits will be ignored. Done. We're done with the A part completely. And now let's move on to the second part. Please tell me if you're clear. If there is any doubt, please tell me. So we have done the first part of 3 marks. Now the second part. Explain the reliefs which are available. Right? Yes. So I hope it tells you that you have to revise the portions again. Right? Keep revising. Keep revising. The good, I'll give you a period for your next mock test. Okay. Now explain the reliefs which are available in respect of the losses that you have calculated in A1 and quantify the potential tax savings for each of them. So in A1 that we have calculated, what is the relief available in respect of these losses and quantify the potential tax savings also. So yeah, very good. So first available option is to do a current year relief. Current year relief where we can adjust it against the other income also. That do we have? Look at the data. So first is a current year relief, but there is no other income which is there, right? It has a chargeable gains. It has chargeable gains. Yeah, so when, see, now this is the current year relief. If you want to go for a terminal loss relief, we can carry it back for the last 3 tax years. Now we have to calculate the relief also, the savings also. So let's see what will be the saving if we go for a terminal loss relief. Okay, if we go for a terminal loss relief, then the saving would be, we will go back to the previous 3 tax years and take it on a LIFO basis. So tax saving will be, first we'll take it against 24,950, right? We'll take it against 24,950. So I can just do it quickly, calculation here, tax savings. First option, I'm just writing it simple, current year relief. So your tax saving is 0 because other than chargeable gains, there is no other income. B is terminal loss relief. If we go for a terminal loss relief, then the tax savings will be, okay, adjust the loss against the preceding 3 years, 3 tax years on a LIFO basis. Okay, so first I will take tax year for the year ended. I will write here year ended 31st March 25. Okay, what is the profit? The profit is 24,950 and adjustment of loss. We can do the full adjustment of loss. 24,950 can be fully adjusted, right? So tax savings will be 24,950 less 12,570 multiplied by 20% because he is into the basic rate tax category. Correct. And the next one would be for 31st March 24. Although the profit is 62,000, but we don't have that much loss available. So adjustment of loss will be 27,2050 only. So what will be the tax savings? Then the tax savings would be, now if you see here, the already PA is over. PA is fully used. He's in the higher rate category. So tax saving will be at the rate 40% because already the BRB is over. 20% category is over. PA is over. Everything is over. So there's a tax saving of 40%. So this multiplied by 40%. right? And I have a tax saving of 820. Clear? Because it's in the higher rate category. So the total tax savings will be, in this case, will be 3296. So we've got a terminal loss relief also. Now you can see there is a chargeable gain also. So we can adjust it against a chargeable gain, as well as if we can do a carryback relief also. This is also third option and fourth option. Third option is chargeable gains against chargeable gains adjustment. Okay, so let's just read about chargeable gains. There is given here. It ceased to trade and sold his house Coral Cottage on 1st March 26 for 125,000 more than he paid for. That means chargeable gain was 125,000. Began working for Verve Limited on 1st May 26. He has no other income or chargeable gains other than the amount referred to in the information below. So the sale of the business assets resulted in net chargeable gain of 74,000. So there is a net chargeable gain of 74,000. Okay. And but we have a loss of 27,000 only. We don't have 74 or 125,000. Nothing. So if we adjust it against chargeable gains, so there's a sale of business asset. That means BADR was claimed. Sale of business is always covered for BADR. So we can then use this adjustment of loss against this 74,000. So here we will have a tax saving of 27,000 into 14%. That is 3780. Correct? Please tell me, are you clear? Please tell me any doubts. Clear, right? Simple one. Okay, there is one more property which is sold, Coral Cottage. It is written as his house. See, the question is silent about it is his main residence or not. So we can give a point here. If it is his main residence, then PRR will be available fully because no other details of other occupation are there. So we assume it is an actual occupation. Full PRR will be there. Clear? And then no exemption will be there. Let's say if it is not his main residence, no PRR. And since he is the BRB is already used by the BADR gain, which is 74,000. So BRB is not available. If BRB is not available, then this gain will be taxed at 24%. And then we will adjust the loss against the property first. So here I will write here chargeable gains adjustments against business assets. Okay, and then D I will write here against chargeable gains of cottage. Assumption that it is not his main residence and so PRR is not available. Clear? So then what will be the saving? The saving will be then 27,000 multiplied by 24%. Right? Because BRB is already over by the BADR. Clear? So this is also one pointer that we can add. Now let's go to the last one, that is against the carryback relief. This is carry back relief. We can carry back the previous 12, the previous tax year, right? And the previous tax year is 24-25. There is a profit of 24,950. So then what is the benefit that we can have? That is 2476. Exactly. So when we do a carryback relief, so first we will adjust against tax year 24-25, the same that we have calculated above. So the relief will be 2476. But what about the remaining 2050? That we can adjust against the current year chargeable gains, right? So then remaining against current year chargeable gains. So that will be 2050. That was the remaining loss multiplied by, now you can take 14 or 24. Let's take 14%. 287 we will have. Clear? Or So there are two options here: the business asset or main or residence or cottage. So here I'll write cottage, right? So then it will be 2050 multiplied by 24%, right? So overall, so if we talk about here, then the total tax savings will be this plus this, or this plus this. Okay, so these are all the tax savings options that we will have. Now, what we can recommend, if PRR is not there, then it's better to adjust the loss against the cottage first. If PRR is there, then it is better to go for a terminal loss relief. Okay, if we don't give, because no, I'm sorry, if PRR is not is claimed, then it is better to use it against the chargeable gains, that is against its business assets. That will reduce the gain more. I mean, that will give more tax savings compared to any other option. Okay, so we have given you five options, and you can see the marking. The marking here is, I think, 6 marks, 9 marks. Okay, so approximately 1.5 marks, 1.5 to 2 marks according to the parts are there. Say current year relief that you give is only for 1 mark. Rest everything is for 2 marks. Clear? Clear? Any doubts, any queries? So we have covered 12 marks plus 5, 17 marks already. We're just left with 8 marks. Tell me if you have any queries. Okay, then let's take the last one. The last three questions. Explain the VAT treatment on the import of goods from Franistan. Franistan, let's take what is the VAT treatment, and only 2 marks. So that must be talking about postponed VAT accounting. It's a very small part. But let's look at the part here. So, import from Franistan. In the 9 months ended 31st December 25, Tariq imported some goods. So, we can say that here Tariq will have to adopt the postponed VAT accounting, and by which uh, postponed VAT accounting should be adopted. So, at that point of importation, then the VAT, output VAT will be recorded but will not be paid for. And in immediately in the immediate VAT return that will follow this period, we will show the output VAT and the recovery of it by way of input VAT in the returns without paying any taxes for it. And this is known as postponed VAT accounting that will be followed. Clear? 2 marks you got. Importation postponed VAT accounting is a by default, rule that will apply. Clear? Okay, the last two questions. State VAT implications of the cessation of the business and the sale of business assets. So it's a simple one that we'll just talk about what is the VAT implications when it comes to cessation of business, and what is the VAT implications when there is a sale of business assets. Sorry, guys. Okay, so what are the VAT implications on the cessation of the business and the sale of business assets? Now, if you look here, Tariq is being paid a gross salary of 58,000 per year. On July 1st, Verve Limited paid Tariq a relocation payment of 34,500. Okay, so everything is about relocation. We just have to discuss the normal rules. Now, there's a cessation of the business took place on 31st December 25. What is the rule? That when the business ceases to be there, then as per the rules, Tariq should inform the VAT authorities or HMRC about the cessation of business within 30 days, not 1 month. Within 30 days of the date of cessation. Cessation is 31st December. 30 days would be 30th January. So by 30th January, the cessation should be informed. Okay, so 30 days is the period within which the authorities must be informed about the cessation. Done. So this is only for 4 marks. So your 1 mark is obtained here. What if he doesn't fail to do so? Then what will be applicable penalty? So right there, that if Tariq does not inform the HMRC about the cessation, then he would be liable to pay penalty on the same. Second, what about the implications when he's selling of the business assets? Okay, so now what if the rule says that if there is a sale of business assets like plant and machinery or inventory, then he will have to pay VAT on the same. Okay, he will have to pay VAT on the same because this transaction was done while he was still registered under VAT, and after that the cessation rules applied. So till the time that he is registered for VAT, he need to pay VAT on it. So on the assets that has been sold as a part of this process, like VAT and plant and machinery, like in inventory and plant and machinery, which will get sold. So then on that, or the other non-current assets, then on that he need to pay VAT amount. You get here 1 marker. So I'm telling you the marks also. 1 marker for 30 days, 1 marker for this, and then 1 marker for deregistration. So now deregistration of VAT is there. So he should inform HMRC about the same, and accordingly he would get deregistered. But what about the liabilities which are there? What about the input VAT that he has already claimed, but the output VAT of which was not paid? So then uh, he would be liable to pay output VAT on all the business assets on which he has previously claimed the input VAT. Clear? Okay, and previously the input VAT that he has claimed on, he needs to pay output VAT on the same 1 marker, and the last marker would be for like he would be liable to pay penalty if he is not following by the rules. Also, I remember there was one point for small value transactions of 1000, right? So we will mention that also. So we will mention that if there is the total input VAT is up to 1000, then there is no need to pay output VAT on the same. Okay, no need to record output VAT on the same if the input VAT that has been claimed and that has been claimed and is still with the business, that asset is still with the business at the time of cessation, so then no need to pay output VAT on it. If it is up to 1000 only, you get your 4 marks, 4 points. Done. Clear? Last one. Explain the income tax implications, are just to 2 marks for Tariq for relocation payment. Now we know that in case of relocation, what is the allowed amount? 8,000. So only 8,000 is the allowed exempt amount of relocation as per the employment income rules. 1 mark. Another 1 mark is, so the excess amount of the relocation which is paid to Tariq by the employer, that is 34,500 less 8,000, will be added to the employment income and will be subject to taxes. Done. You got your 1 marks and 1 marks like this. Done. Okay. Clear? Any doubts? Any queries? So are you there with me, Madhavan? Are you done? We are done with the entire past paper discussion, and along with all the explanations, all my working, all the reading, and the pace at which we have done so slow, we still have been able to do it in 2 hours 50 minutes. I'm excluding 2 hours. 2 hours and 45 minutes, excluding the break time and excluding the start time. Okay, 2 hour 40 minutes with all the detailed explanations and the slow pace with which I've gone. But what I adopted was parallel solving approach. Always adopt this approach. Always read the question in parts in slow way, because question reading will help you make